Hello, welcome back to Serene Crypto. So today, I'll be talking about Passage, the first metaverse platform atop the interoperable Cosmos ecosystem. So as usual, there is no financial advice and please do your own research. With that out of the way, let's get to it. So what is Passage? So Passage values come from that it enables users to quickly construct their own metaverse projects, which will then be able to communicate with one another through the Passage ecosystem. Passage accomplishes this by combining Unreal Engine 4 animation with Akash Network CPU processing and AWS GPU compute. Passage will create its own in-house project, Strange Clans, to demonstrate the platform and will provide a demo to interested parties. Passage features its marketplace, launchpad, and token PASG to help with transactions in the ecosystem. Passage has also its own marketplace where NFTs will be traded under it. So, a key selling point of the marketplace is that it utilizes Atom as its main medium of transaction. The marketplace costs 3% transaction fees, which will be split in half, with half going to reserves and the other half going to staking rewards. For the staking incentives, Atom will be converted to PASG, creating purchasing pressure. One thing to keep in mind is that the release on transaction fees for staking rewards will not commence until at least 1 year following the launch. Creators can also mint NFTs for free in the marketplace, which encourages more NFTs to be traded over there. As the marketplace grows in popularity, the price of PSG will rise. The Cosmos NFT ecosystem is still in its infancy with no established marketplace yet. Passage Marketplace may very well be the front runner to be the leading marketplace in the Cosmos NFT field thanks to its first mover advantage as the first NFT marketplace that uses Atom as a primary token of exchange. So now, I'll talk about PASG, the utility token of the Passage ecosystem. PASG is used for staking, streaming, world building, and governance. So for streaming, users will be expected to pay after a free initial streaming session. Hence, PASG is used for the world streaming fees. PASG also used for downvoting rights and governance. And also, you can use PASG to buy World 3D assets on the Passage Marketplace itself. So the main utility of PASG lies in the several advantages of staking PASG. So the first, however, there's one disadvantage, and that is staking PASG incurs a lockout of 21 days. Staking PASGs offer attractive APR of minimally 50%. So this 50% APR is based on the premise that 100% of the security supply is staked. So if the staked supply is lower, the rewards will be divided among the remaining staked PASG, giving the remaining stakers a larger share of the APR instead. So the staking APR will be cut by 55% after each year until the maximum supply is achieved at year 5, at which point the staking rewards will be derived purely from the marketplace transaction fees. So although this high APR may sound appealing, it comes at the cost of significant early inflation at the start. So the second major benefit of staking PASG is the ability to create new worlds. So the amount of lockup period will be determined by how big the world is and the scale of the world itself. So these Passage tokens will be staked at the same rate as regular staking rewards. This will then motivate Passage ecosystem holders and long-term believers to establish their own worlds, hence expanding their Passage ecosystem. So there are also other benefits of staking Passage, and they include free airdrops and exclusive content from new metaverse projects developed on the Passage ecosystem itself, a reduction of transaction fees on the marketplace, and it varies from like 0.4% to 1.2%. And lastly, it allows you to have a chance to be on a Strange Clan Towns 2 whitelist. And this is quite lucrative as the Strange Clan Town 1 NFT floor price currently sits at 76 Atom. So all of these demand pressures in an ideal environment will drive up the price of PASG. In actuality though, there are supply constraints such as inflationary tokenomics that will keep the price of PASG from rising. So now I'll talk about the tokenomics itself for the team and how is the allocation looks like. So the first will be I'm talking about with the team and advisors. So actually the ideal scenario for a team is to have no more than 20% of the market share. Since any team more than that will result in the community losing motivation to hold on. 25% allocation is 5% higher than the maximum threshold, which I believe is excessive. So although I like the fact that the team is dots, that they have worked on projects for huge corporations like Amazon, and also they have been working on Passage for 2 years before releasing their own token. However, I don't like the fact that the advisors are not dots at all, and the team is also relatively unproven in the cryptocurrency space. On the bright side though, has a 1-year cliff followed by a 30-month linear distribution, ensuring that the team and advisors have a long-term strategy and vision in plan and cannot simply dump their own tokens. So it's not all about a private sale. So the goal of a private sale is to bring in strategic investors who can not only contribute value but also help support the project's future development. So 20% allocation is actually quite appropriate in most scenarios. However, in this case, there are no known investors in the case in like those famous crypto venture funds like Defiance Capital or Lavender Research. So a 20% allocation in this case I think is a bit too much since there are no investors here. And the unknown investors undermines the project's legitimacy. So now I'll talk about the public sale. So the allocation to public sale is 9% and it's like above average, and this I think is quite fair to the token purchasers. And now moving on, we go on to the airdrops. So holders of their original Strange Can NFT as well as stakers and LP providers in the Cosmos ecosystem have received quite a sizable allocation of 15%. And I like the fact that there's a preventive measures to prevent the token dump. So to discourage airdrop participants from instantly selling their tokens, the initial genesis to airdrop will only consist 2/3 of the total airdrop allocation, and it can only receive the remaining 1/3 of the airdrop tokens if the tokens are staked for 14 months. Although 14 months is quite a long time in the crypto world, long-term investors are likely to stake their Genesis tokens because actually the offer is actually quite lucrative. They will not only receive a 50% boost in their token allocation, but they also receive a 55.3% rise in staking incentives without taking out the compounding into consideration. So to sweeten the deal even more, the unclaimed airdrop tokens will be burned to reward those who stake the Genesis tokens. The foundation also received the larger token allocation at 31%, but it's actually for quite a good reason. The fund will primarily be utilized to continue project development and also to provide incentives to the LPs as well as to serve as a treasury in case of a black swan event. So to maintain this fund's integrity, the teams will be transparent by preparing annual high-level overviews of how the money has been spent. So moving on next, I'll talk about the security supply and total supply of the tokens itself. The security supply is actually quite low at only 7.25% of total supply, in which 2.83% of total supply come from 2/3 of the airdrop. 2.7% of the tokens come from public sale, and 1.81% of the total tokens come from 20% of the foundation tokens itself. And these tokens will only finish vesting in the 5 years. You can also see that the most of the token supply comes from the staking rewards at 71%, and these staking rewards will increase the inflation as well. And for the PASG, it's, as seen from this chart over here, it's hyperinflationary at the start, and inflation will increase at a decreasing rate. So the inflation of tokens is strongest in the first year due to the staking payouts. Although high inflation looks to be a concern, it may actually be advantageous in this scenario. So the significant staking incentives in the first year are intended to reward early adopters and convince PASG owners to lock up their currencies by implying that individuals who do not stake their coins will lose value of their tokens due to inflation. So if there are no users who are not staking their coins, PASG will enhance this concept by rewarding stakers with a bigger rewards. Despite this high rate of inflation, this can actually result in a price increase for PASG token. Keep in mind that because staking rewards are not subjected to the lockup period, they can still be sold. And the inflation of the tokens actually lowers in the second year compared to the first. But although inflation is maybe lower, it may actually be more substantial. This is due to the fact that release of tokens from the team advisors private sale foundation and second airdrop is now the key factor contributing to inflation itself. And investors will be more likely to take profits if the PASG token appreciates significantly. And this may suppress the price of the PASG token. Furthermore, staking rewards will also fall in year 2, making taking profits on the PASG token a more appealing option than staking PASG. So the significant inflation of the PASG coin in the first year may actually deter investors at first glance. However, upon closer examination, the first year may actually be the ideal time to buy PASG instead, because staking incentives are highest in the first year at minimally 50%, and thus this rewards the early adopters. The second year may actually have a lower rate of inflation, but the investor's selling pressure is greater, making holding PASG tokens in the second year a less appealing option. As most tokens have already completed investing, inflation will slow down in the third year. And during the third year, this may prove to be another optimal entry point. So now I'll talk about the team and advisors. The team's name is 3 Division, and they are dogs, which adds a layer of trust to the group. They also claim to have collaborated with significant corporations such as Amazon, though this claim is still unsubstantiated, and I could not find much info about them on LinkedIn or the Passage website. However, they do have their own YouTube channel, and it's actually quite positive as they regularly host AMAs and updates on their YouTube channel and also on Discord, and the team gains a level of professionalism as a result of this. Overall though, the team is still relatively obscure in the cryptocurrency world. However, this does not mean that they cannot do well in the future. And the good thing is that they are not and transparent. They also achieve targets on the roadmap, such as the marketplace with little fuss, giving us investors confidence that they continue to expand Passage well. The investors and advisors on the other hand are quite a negative point to make, as they are unknown despite only 24% of the token allocation. This seems a bit suspicious. And there are also no big vote of confidence from crypto venture funds like Alameda Research and 3 Arrows. Now moving on next, I'll talk about the community. Passage has like 5,424 members as of this writing, whereas Strange Clans, their flagship metaverse project, has 11,209 members. The community seems to be very engaged that they even built a sales tracker on their own initiative. I also like the fact that when I ask queries, the moderators there are quite responsive, which is quite a good positive sign. Furthermore, the Strange Clan NFT floor price is 76 Ether, with a daily transaction volume of around 27. This indicates that the community is interested in the PASG token, as holding Strange Clan NFT will lead to a PASG airdrop. However, the chat rooms are not extremely active, and there are times where no one is chatting. This is an indication of concern, as well as the fact that the community still has a lot of opportunities to develop. Now I'll talk some of the competition that Passage will face. Passage's main competition will be other established NFT blockchains such as Ethereum and Solana. Furthermore, it's also not the first NFT project in the Cosmos ecosystem, despite it being the first in the Cosmos metaverse gaming ecosystem. So its main competition will be Stargaze, another NFT project in the Cosmos ecosystem, and I think they are the first to launch in the Cosmos ecosystem. Okay, so now I'll talk about how Passage faces against these other blockchains. So okay, let's be realistic here. It's almost impossible for Cosmos NFT ecosystem to catch up to Ethereum and Solana. That being said though, Cosmos NFT can still perform well by capturing a little slice of the NFT market. It can do so by setting itself apart from other NFT blockchains by permitting interoperability between chains that are part of the Cosmos umbrella hub, such as Stargaze and Passage. So Passage only has one project, Strange Clans, but this project has a total sales volume of 3.7 million and an average daily sales volume of 0.1 million with an average sale price of 77.78 Ether. This demonstrates a high level of interest in this project. And this achievement is even more astounding given the fact that Passage is still brand new and it's only one project. And despite this handicap, it is easily outperforming rival NFT ecosystems such as Phantom and Tezos. And Tezos is even sponsored by, Tezos is even also have Ubisoft as one of their main investment partners. So we continue development and increase in number of projects and launching of PASG, the Passage marketplace sales volume will continue to rise. So as the marketplace volume continues to grow, this will cause a price appreciation of Passage as half of the transaction fees will be committed to Passage. So now I'll talk about the difference between Passage and Stargaze. The first difference is the transaction medium. Stargaze opts to use stars while Passage uses Atom. So if there are highly sought after NFTs in the Stargaze marketplace, this has a benefit of boosting the price of stars token. However, persuading individuals to hold stars, which is quite more volatile and less proven than Atom, is actually quite difficult. And thus, this puts a lot of pressure on Stargaze ecosystem to produce a superior NFT than Strange Clans, as most people would like their NFTs to be denominated in Atom rather than stars. So the second decision is that Stargaze Launchpad is live, while their marketplace is still being developed. It's very difficult to precisely determine the price of NFTs in the Stargaze marketplace the Stargaze NFT ecosystem, because there isn't a marketplace for them. So the lack of a current marketplace is detrimental to Stargaze growth, since it prevents some projects from minting out because customers are hesitant to purchase NFTs with low liquidity. Since the major demand driver for the stars token is the purchase of the NFTs, a lack of demand will cause the price of stars token to depreciate. Furthermore, Stargaze NFT projects may sell their stars token for liquidity, and this may escalate the price depreciation. And this is seen from the chart which I will show later. Passage, on the other hand, has launched its own marketplace, which not only features one project, Strange Clan. So this Strange Clan has advantages of being the first metaverse project with significant utility, unlike some of the other projects in the Stargaze projects. And the current floor price of Strange Clan NFT sits at 76 Atom, which is nearly 9 times the mean price, meaning that the market actually believes in the first mover advantage of Strange Clans. So this demonstrates immediate demand for Passage NFTs, and the lack of a launchpad is not as significant as the lack of marketplace, as a high quality project with liquidity will outperform several projects with no liquidity at all. So now I'll try to evaluate PSG by comparing Stargaze. So as we can see from the first chart, Stargaze instantly dumped since its creations, and it is no surprise due to the selling pressure from the airdrop. And this is mostly because airdrops account for 25% of Star's initial genesis supply. So despite Stargaze's efforts to prevent a massive dump by creating missions in which only 20% of the stars can be claimed instantaneously, the tokens were nonetheless dumped. As airdrops account for 39% of the Passage original genesis supply, Passage will most likely suffer even more from token dump than stars itself. So you can see from the chart, stars will begin a long-term uptrend after the dump, and it will peak at 8 of February 2022 when it reached an all-time high of 84 cents. However, after reaching its all-time high, it became a trend reversal with no signs of stopping and no signs of recovering, unlike its altcoins counterparts, as due to the reasons I listed above. So now I'll list a few scenarios that will try to model the price of Passage using the assumption that Passage will have the same market cap as stars and also follow the same price trajectory. Since complete information on the secondary supply is unavailable for stars, the first scenario assumes an initial price of 32 cents and an initial secondary supply of 250 million stars. Stars market cap will thus be priced at 80 million. And because the initial supply of Passage is 145 million, each Passage will be worth 55 cents if it has same market cap as stars. So I got this 32 cents from the creation over here. So the second scenario assumes an initial secondary supply of 250 million stars at an all-time low of 6.5 cents Stars will now have a market cap of 16.25 million. Because the initial supply of Passage is 145 million and Passage has the same market cap as Stars, its Passage will be now worth $0.112 instead. And the third scenario, we use the all-time high of Stars at 84 cents with the assumption of secondary supply at $410 million, and the market cap of Stars will then be at $344.81 million. The Passage valuation will be based on two assumptions. The first is that Passage has the same market as Stars at which is $108 million, and the second assumption is that Passage supply is 145 million, which is starting supply, plus 10.15 million, the staking incentive compounded daily for 52 days, and thus which is 165.15 million. As a result, each Passage token will be worth $2.09. The fourth scenario uses the current Stars price of 21 cents and secondary supply of 591 million tokens. Stars will now have a market cap of $108 million. The Passage valuation will be based on two assumptions. The first is that Passage has the market cap as Stars is, which is 108 million, and the second assumption is that Passage supply is 145 million plus 23.2 million, which is the staking incentives compounded every day for 108 days, and that's equals to 168.2 million. As a result, each Passage token will be worth 76 cents. Because there are so many assumptions in these valuation scenarios, they should be all taken with a grain of salt. Passage will not react in the same way that Stars does. The goal of this valuation approach is to evaluate NFT projects' pricing action in the Cosmos ecosystem. With these prices, it appears that the best time to acquire Passage is right after the airdrop. Furthermore, I believe Passage will be able to surpass Stars' all-time high since it already has a marketplace with a transaction volume that exceeds that of several of the NFT blockchains. It also has the advantages of being the first metaverse project on the Cosmos ecosystem, giving a head start. So when should you get Passage? To get Passage, the first option is to wait for a public sale, and the second option is to buy a Strange Clan Town 1 NFT before a snapshot on 30 April to be eligible for the airdrop of 5,700 Passage tokens, in which 2/3 will be raised initially and the rest only unlocked if the tokens are staked for 14 months. The airdrop of tokens will happen in mid-May, 3 days after the public sale. So I will talk about a few strategies: buying during the public sale, buying Strange Clan Town 1 NFT before airdrop, and buying Strange Clan Town 1 NFT after the airdrop. So the first strategy is to buy Passage during the public sale itself. This is actually not a great strategy, as the price of Passages will most likely drop after the airdrop of Passage, as the infusion of token supply will undoubtedly drive the price down. So now moving on next, the second strategy will be purchasing a Strange Clan Town 1 NFT before the airdrop. And the floor price of a Strange Clans NFT is 76 Atom, and is comparable to $2,280 if 1 Atom is $30. So now on the table below implies the following the airdrop of Passage. The floor price of Strange Clan NFT will lower to 40 Atom, which is equivalent to 1.2k. So and then the valuation of PSG will be done by comparing to Stars. Using the first scenario where Passage is 55 cents and the Atom price continues at $30, purchasing a NFT today will get you $290 in tokens and 3.135k if the tokens are staked. And that's excluding the Strange Clan NFT intrinsic worth. If you assume that the NFT floor price will lower to 40 Atom after the airdrop of the tokens itself, the total value will be $3,290 without the state tokens and $4,325 with the state tokens. This will result in a profit of 1.1k without state tokens and $255 profit with the state tokens. This is unquestionably the ideal scenario. However, becoming one of the few fastest fingers to dump the tokens straight away after the airdrop is almost impossible, which leads us to the second scenario. Taking the second scenario into account, which is quite high likely to occur, PSG will be worth $0.112 because most people will dump the airdrops and it's preferred to be one of the first few to dump the tokens. Buying a Strange Clan Town 1 NFT now will produce $308.4 and $957.6 if the tokens are staked, assuming the Atom price continues at $30, and this excluding the NFT intrinsic worth. If the NFT floor price over to 40 Atom, which is 1.2k after airdrop, the total value will be $1,838.4 without state tokens and $2,157.6 with the state tokens. This results in a slight loss of $441.6 without the airdrop and $122.4 with the airdrop. So actually, usually in most scenarios, buying an NFT and its airdrop after a bust airdrop itself has passed is usually more profitable than buying an NFT for the sole purpose of the airdrop. However, in this scenario, the solution may actually favor purchasing a NFT before the airdrop of the tokens. There are several reasons for this. The first is buying the NFT for airdrops allow the buyer to stake the airdrop tokens for an additional 50% yield on top of the 55.3% yield from staking rewards without the compounding. This is actually appealing to long-term investors. And the second argument is that while selling at the price of scenario 1 is extremely difficult, selling at prices higher than scenario 2 is still quite possible. Taking all of this into consideration, a reasonable risk-adjusted approach would be to acquire one strange cloud down one NFT before the airdrop and stake the airdrop tokens, while dollar cost average on the PAASG tokens after the airdrop and prices near $0.112. And to boost profits, one can purchase another NFT now and sell right before the snapshot when the hype is at its peak. However, this runs the risk that the NFT hype is already priced in. And this valuation with a grain of salt as they are based on a lot of assumptions, particularly the price of passage and also the valuation of the Strange Clan's downward NFT after the airdrop, as there's no accurate way of determining its value. So now I'll talk about the conclusion. So to conclude, Passage key selling point is actually its first mover advantage, and the Cosmos metaverse area do well, Passage will also do well, as it's the front runner. And when comparing transaction volume of Passage NFT space to that of other NFT blockchains like Tezos and Phantom, which beats convincingly, the future of Passage looks bright indeed. The volume of the Passage marketplace will continue to climb as more projects are added and PASG is released, causing the price of PASG to rise as well. However, a caveat to take note of is it's not enough just to have the first mover advantage for a project to succeed. Passage first mover advantage is also complemented by other benefits such as a skilled, albeit unknown team, thoughtful tokenomics, and a wide range of PASG utility. However, not everything is as it seems in life. There are certain problems in the Passage itself. The first problem is that the investors are unknown, implying that no venture funds have given their seal of approval. Other thing to take note of is that there will almost certainly be a dump following the token airdrop, and the tokenomics for the PASG second year aren't that great due to the increase in supply of the unlocked tokens. There's also the possibility that the team won't deliver the promises, the Atom will crash, and the initial volume of transactions on the Passage marketplace is merely hype. Passage appears to be an excellent initiative after assessing the risks and rewards. I'll be allocating a small percentage of my capital into it, as it's quite a risky play, and it's still quite a small cap coin. So my plan is before I snapshot, I'm going to purchase a Strange Clan Taiwan NFT, stake the tokens, and our dollar cost average near the $0.112 price itself. And then I'll take profits at $2 and the $4 level. And my target is actually quite conservative, as I want to be pleasantly surprised instead. And there is no financial advice, and please don't just blindly ape in. Please do your own research and stuff on the nice.